U.S. economic data, most of it pointing to the possibility of a new U.S. slowdown. In response, JPMorgan cut its GDP forecast for the third quarter to 1.5%. Weak consumer spending is part of the reason. For more, we bring in the author of the report, Mike Feroli. He is also the chief U.S. economist at JPM, and according to Bloomberg data, Mike is one of the top forecasters of the U.S. economy, U.S. economic data, making him a Bloomberg best. Mike, thanks so much for joining us this morning. Just how much is the U.S. consumer going to slow down?
Well, I mean, we actually think the U.S. consumer will pick up from the second quarter when growth in consumer spending was basically unchanged to the third quarter. But it's not going to be, I don't think, enough to really power the economy to above trend growth in the third quarter and the second half, for that matter.
So it's not going to be enough to fuel a pickup. We know that consumer spending equals 2/3 of GDP. There's a lot of factors involved, most notably the weak jobs pictures, right, Mike? I mean, if you don't have a job, you're not going to spend extra money. I guess that had to be part of your equation.
Right. The job market has really slowed over the last 2 months, and you see that in consumer sentiment numbers, and I think you also see that in consumer spending numbers. So if we could turn around the job market, I think that would be a huge plus. But right now, it just doesn't look like that's happening in a real meaningful way.
It certainly does look unlikely. As for tomorrow, Mike, are you above or below consensus for the jobs data?
We're a little, I guess officially a little below consensus. We think 90,000 private jobs will be created, which would be better than the last 2 months, but slower than what we saw earlier in the year, and I think a little below consensus. And then on the government sector, we're expecting about 45,000 jobs to be shed there, which leaves you with only, if we're right, around 45,000 jobs created overall.
Mike, getting back to consumer behavior, there's jobs, then there's also other things that we spend money on. For example, gasoline. We did see the price at the pump come down a little bit in July, so I'm guessing that's one of the reasons you don't think that the consumer is going to be too hard hit. You just think that we're, in general, going to hold pat.
Right. We've seen gas prices start to come down beginning, I guess, in May. They haven't come down quite as much as we'd hope. It is giving some support to consumers, and I think you're seeing that in auto sales this month. I think you may see that in retail chain store sales, which we get today. So we are expecting a little lift from that, but just not as much as we had hoped 2 or 3 months ago.
Mike, thank you very much. Mike Feroli, chief U.S. economist at JPMorgan, also a Bloomberg best.